Good morning. I hope this is working. I'm going to turn that volume down because I heard echo yesterday. Let's see. There we're live now. Turn on my do not disturb. Oh, okay. Setting things up. Hey, Rosa. Morning, Alan. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound. I am drinking my coffee. Morning, Mark. Morning, Josh. I might as well turn this on. Let's see. I'm watching Earnings Hub. And by the way, for those people that wanted to sell yesterday, I am drinking coffee in Diamond Hands, baby. Diamond Hands. Morning, Beast. Morning, Nathan. I was looking at this stock. Significantly more green than yesterday. In fact, Apple, my stock, my portfolio should be greatly increased. Google was interesting. Again, you popped up here to 230. I think you go to 240, 245. I mean, I think, and again, I think that's where Apple kind of goes. But I got some thoughts on that for folks because while I am an Apple bull, I'm not ignorant to the fact that it's trading 30 times forward earnings at 6% growth. I need to add Ethereum to the core portfolio. Tesla's up on their version 4, outlay 4 or something. I don't know what it is. But interesting look. Let me see. Do I have any other list? Let's see the watch list. Affirm's up. Let's see. Anything? Baba's down 1.2 because Baba, I brought it up, but I said I thought it was going to do good on earnings, and that 120 was kind of the base. It's at 136. Bloom Energy, interesting. I think I've given my thoughts on that one. BTGD, which is Bitcoin and gold. Interesting play there. Hasn't been working out as well as just a gold play. Doc N, which is DigitalOcean, coming back a little bit. There's the ETH play. Fubo's interesting. Fubo, listen, over the past 2 years, you made 78% buying and holding this stock. It's been no joke. Not a bad one to hold on to, but God, it's been up and down. Hams is up 2%. We've seen this one kind of play out a little before. It got you in at 44, but it's at 42 right now. Monday, coming back, filling the gap. I mean, you got a gap to 246 on this one. Nebius up at, 1.19. Oklo's up 1%. Oscar's stuck there at 16. I mean, It pops and to 23 every now and then, but it's stuck at 16. Let's see. Atlassian's up 1%. Nothing. VRT's up 1%. WDC, Western Digital. Interesting. If you have the September watch list, you'll know that one. The September watch list, which is in right there. Let's just say this one's in there. And we've done quite well. So okay, let's go back to core portfolio, core investments. I'll do some scans. Let's see what's entering in. Yeah, if you got my the paid pick, you're going to 100% gain on that one, vacation guy. Yeah, yesterday was, I mean, definitely, if you just look at the market yesterday and we just go to QQQ, for instance, I mean, it's a buy the dip. That's essentially what happened. I mean, you see it opened up, futures opened up down. We were down there. It was a buy the dip at the beginning of the market, but then it lost steam. But by the end of the day, you had your upside. So you look at a weekly chart of this, they do look extended, but you know, they can stay extended for quite a long time. So it's not like it's the end of the world. You just got to be aware of that. Morning T-Drift. I think I bought some yesterday. Walmart. Let's see. We got Palantir, Walmart. Palantir's interesting. It was hanging around that 150. I mean, if you believe in support and resistance, that's kind of a previous resistance turning into support. So core investments, let's go to, let's see, August 2025. Anything in there? Since August is done, Palantir. We had Palantir in there for August. Let's see. Let's do leveraged ETFs. There's got to be some. Yes, there are. ETFs, DRV, FAZ, FNGD, HIBS, PTIR, SRTY, and the Chinese yin and yang. Interesting. Low cost ETFs, nothing. We're going to do spider sectors, nothing. And then let's do the watch list. Anything in here? ANET, Arista Networks, Palantir. Okay, we're out of that one. Let's go to the indexes. We'll go to the Dow. I don't think there's anything on the Dow. Walmart. Yeah, Walmart we got already. Let's go to the NASDAQ 100. Palantir and Ross Stores. Mondelez. Comcast. Is this one, you know, it's funny because I often, Pepsi got a cross. I often think of Comcast. I used to work for Comcast, hated the fucking company. Still can't stand the company. I think they treat their employees like shit. And I was one of their employees that they treated like shit. So, they purchased my Time Warner system that I was in charge of, and then proceeded to tell me I'm not in the budget for next year. and you're going to have to work, 16-hour days to prove yourself. And then they didn't put me in the budget. So my position, and they didn't let me go. I quit. And then I negotiated a package to leave, and they reneged on the package. So just bad management all around. But the gap up there is interesting after their earnings. But it's 35.38. I mean, that's not a stock that I want to invest in. Interesting trade, but I'll skip it. I'll stay away from it. Okay, there's your scans. That's everything. That is everything. We'll go to the 4 hour. You can see. Got you in at 32, which was actually a really good trade because you made about 10%, but I probably wouldn't have taken that trade. I mean, honest to God, I wouldn't have taken that trade. So, okay. We'll look at QQQ since that's the one I go. Morning, Harold. Good morning. Today is going to be a little bit single stock focused. I like this take on energy. I was reading Shy's like Twitter yesterday, like, a fanboy. Sam, great look at MNR. NAV. Right, we'll look at that one. Open Door. This is the guy you want to follow for Open Door, and he's now an insider at Open Door. Amazon. Remember how well this one went for Netflix? That's an interesting one. Zscaler. They popped after hours, but it has since come back down. They beat earnings really good. Remember I said gold was a good investment? We were seeing, Jesus. I mean, we saw some that were up just crazy yesterday. NUGT, the nugget. This is the gold miners. Up 5% yesterday. I mean, just went nuts. Google and Apple. This story was it's going to affect... Morning, Larry. Morning, Laura. This one's going to affect my portfolio more than anything today, and it's good news all around. So I have some news for people, a message for people who didn't want to buy Apple at 180, didn't want to buy Google at 180. The big gets bigger. We're coming up on the holiday spending stuff, so you're going to see a bunch. I was perusing. Let's just go. Where is this one? This one, I went to Stock Screener, and then I think it was top AI stocks. Come on. And quite dividend stocks by quant, trending AI stocks. That's what I did. Okay. We'll go there. You know what? I'm going to put this. Oh, no. Copy. And there we go. 25. Yeah, come on. Hit the thumbs up button. Amer's right. Thank you, Amer. I couldn't live yesterday. I couldn't find these damn rules. So I couldn't find those damn rules. I scalped it. Let me see what I'm up with that stock. I think I was up $10 at the end of the day yesterday. This is the new Alpha Pick stock. I scalped it at noon. live on Substack, so you can go watch that if you'd like. Holdings. I don't even remember the symbol, to be honest with you. Okay. So it is up. I got in at 21.39 and it's trading at 21.73. So it's going to open up higher. So kudos to those that have held, because again, diamond hands. Kudos to those that held. Eric, I don't own Oracle, but I like Oracle. And I should have owned Oracle, and I've been following Oracle for quite a while. And we're talking when it was in the 60s, when it was back here. You can see I have some notes here. When it went on this run, it's not back tested, but because that's where the back testing starts. But back here in 2022 in October, when it went on this run from 60 up to 120, that was where I was really like, okay, I need to get into this. I think I traded it twice during this time. So I have not been great at trading this one. Instead, I should have just owned it. I will tell you right now on the 4 hour, would I get into this one? Because I don't own it. And the answer is no. And it's a very simple answer. So the question I think you have is, hey, do I think it's a good long-term investment? The answer is yes. Do I think it's a good short-term investment? The answer is no. On the 4 hour, you don't have confirmation. You have the MACD's beaten down, but you take a look at the weekly, and the weekly indicates that the MACD is still extended, that the RSI is still extended. I like that 170 kind of area right there. I mean, we could even move this one up if you want to about 200, which is still 10% from where it is now. So, God, I hate that. But let's look at the, Oracle. It's a hold in the quant, but that for something like a mega cap stock, the quant is not the most forgiving. The valuation is stretched. I mean, 33 times forward earnings, that is stretched. I will tell you, I feel it's stretched. The reality of it is, hold on, I need to turn this off. I forgot my little, there we go. Now it's purple back there. It's not stretched if they were growing, but then I look at the growth and it's 8% year over year. Now, the range is between 118 and 260. Where does Wall Street think that it's going? 244, which is 10%. So from a short-term perspective, I think you're looking at a little bit more weakness. I would look at pulling back maybe about 5% and then start to pull the trigger. But the 4 hour algorithm, it trades great. Now, the last trade, you got out. They have earnings coming up next week, I think. I can't imagine it does bad. I just can't imagine it does bad. I can't. I mean, it's been lost in the AI shuffle, but this company is taking Uber from an on-prem server to a cloud server. Uber, that's huge. Ooh, Pedro from Portugal. Hey, but I like Oracle. I think it's a good long-term one. I like the Wall Street target. They've chased it. They've definitely chased it up. So I just, for me, I've never owned it and I've missed it a lot. But that 200 level would probably be an area. You know what? Let's just set an alert. create an alert at this line. I'm going to put that line at 200. Create an alert at this line. And I'm going to say, touches the buffer area. Let's go with $3. There we go. And we'll do it for 90 days. And alert name by ORCL. Create alert. Boom. Now, Josh, Eric, I've got a perfect way to just remember, hey, if it gets down there, that's great. If it does, I'll buy it. And that 190 portion, if you look at it, it just really comes from these previous highs where it slightly pulled back to that. And it is 170, but I do like it at 200. If it gets to 200 or so, that's where I'd probably pull the trigger. Ever since I sold SMCI and Dell, I just haven't been in this equipment standpoint, Amer, to be honest with you. And do I want one that's gone from 13 in April to 22 into earnings, where we know that Dell after earnings? We'll look at Dell after their earnings. Look at Dell after their earnings. They didn't do well. Look at SMCI after their earnings. They didn't do well. So the logic there for me would be, I'm staying away from it. Now, SMCI trades really well, by the way, on this 4-hour algorithm. It just got you out with a loss. But 71% versus 42% over the last 2 years. And that's on a stock that kind of has gone sideways. So it's not a horrible thing to think about that's a good opportunity. But hopefully, Eric, that makes sense for you. Kind of the way I just looked at that. And Amer. Again, don't let me influence your buys or like your process, because you should absolutely be doing a lot of this yourself. I don't own any of those, so Oracle is just one that I know about because it's been on my radar for so long. What analyst? Oh, Steve Kress, ride the bulls. 5 consumer discretionary stocks with market crushing momentum. I need to email Steve and tell him to come on the podcast again. Okay, let's get into the podcast. By the way, one of the comments yesterday was that I'm unhinged. Let's see. This was good. You guys should go and comment to this dude. By the way, his name is Edgar. First strike against you, Edgar. This is more of it's not a comment, it's a review. I mean, I don't understand this dude's comment whatsoever. I guess, comments. How do I see the damn comments? That's Edgar. I think I wrote to him. I don't know how I see the comments on the page, but oh well. I don't want to block them. He's not a good person. I mean, you don't leave a comment that somebody's unhinged. Yeah, it's okay. Name one successful person in this world that's not unhinged. Die poor, douchebag. Steve won't come on live. What'll happen is Steve and I did an interview before, and it's great because, I mean, just an everyday freaking nut job like me, an unhinged nut job like me, interviewing Steve Kress with questions like, why'd you pick this? Why'd you pick that? Why'd you pick that? I mean, excuse me while I give you some ASMR. That's the other thing people complain about. Listen, I hydrate in the morning, so it's kind of my thing. If you're not hydrating in the morning, F you. Okay, let me go. Go hit the record button. Good morning. It is Wednesday, September 3rd. We're in the fourth quarter, and September started with a bang. Maybe not exactly the bang that you liked. We'll go over my results from scalping the alpha pick yesterday because I was live on Substack. We'll go over some of the opportunities that yesterday presented us. The September watch list seems to be doing pretty well. We'll go over some of the screeners that I found. I was just kind of sitting on the couch and looking at stocks and maybe the next alpha pick, kind of finding it. We'll go over Google and Apple because that's huge. We'll go over gold. We'll go over Zscaler, all the earnings. Open Door. Have I mentioned it before? But I just want to start off this podcast with a little visual. So if you're watching the screen, you can see right now, diamond hands. Did yesterday feel uncomfortable? Absolutely. Did I lose more in the market than I made my first 2 years working out of college? Absolutely. But it is what it is. Just in case people think I'm a genius, okay? I will tell you, I sold a stock on Friday. Remember, Friday was a down day, which I outlined to paid members on Friday why I sold. It was up 10% yesterday. Now I sold half my position, so it's not the full position on Friday, but it was up 10% yesterday. It's up another 10%. The reason I sold half of it because the logic was I had journaled this one, okay? I bought August 11th. It gained 20%, and I was taking 10. People were asking, are you taking profits? Are you taking profits? No. I looked at the journal, and my thesis was intact. It was around earnings. Earnings blew it away. Okay, so I didn't take the 20% profit that I would normally take on a trade because the thesis was earnings. Great guidance, boomed 50%. So on Friday, it was reported on Thursday. After that, I actually locked in the profits on half of it. I looked at the thesis and it was still going, but I saw the 4-hour algorithm didn't have me out. So I said there might be more. It was up 10% yesterday. It's up 10% again. Am I buying back in? I will look to get back in when it gives me another signal in the 4-hour algorithm. Okay. I like this stock. I like the thesis of it. They just confirmed on earnings. I think it gets bigger. Again, paid members, you have access to it. So let's talk about another one yesterday because Alpha Picks. And Alpha Picks is a portfolio. If you don't know what Alpha Picks, okay? Alpha Picks is a data-driven portfolio. You get a pick on the 1st, you get a pick on the 15th. And since yet the 1st was a holiday, we had it yesterday. It comes out at noon. The portfolio is incredibly results driven. 210% during the same time period. The S&P was up 70%. These are numbers from August 14th. So it's been about a month. I need to update this screenshot. But the key to this is here. They tell you when to sell. It's a managed portfolio. They literally email you to do the work on your own. So I know from my time with Motley Fool, because we had Motley Fool as a family in the early 2000s, and me and my dad would log on. There were calls, 1 o'clock in the afternoon, and there were calls. Okay, we're going to announce this month's pick. Boom. You could literally scalp that pick if you were fast enough. Now, the tools were different. Why did I start doing this with Alpha Picks? Because their audience is so large. It is a well-followed portfolio. Hundreds, if not millions of people subscribe to this. Hundreds of thousands, I should say. So there are quite a bit of movement. Okay? Not only does Alpha Picks give you a great performance, but you also have this type of opportunity. And I want to make it clear, this is an opportunity that is not part of the portfolio. So seeking alpha, it does not condone this. They actually try. There are rules around this. So they try and limit the amount of people that could scalp. We're just so lucky that we have a community, and live on Substack, I can go live. So we did it. I don't publish the name, but for everybody who's interested, what I did was, and live, I couldn't find this. So I posted a separate post yesterday about what are the rules. Okay. The rules are simple. Go to the website around noon. You refresh like a mofo. You know, say you're a 15-year-old grabbing at your first girlfriend. That's what you do. Boom, 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 boom. If the pick is a small cap, less than 500 million, it could move higher. And we've seen that with several picks where they move 10, 15, 20%. Pull up a 1 or 5 minute chart, wait for confirmation, and buy it. Once it loses confirmation, even if it's only a 1% gain, get out. Don't linger in the trade, okay? But what did I do yesterday? It was a larger market cap. I think it was around 2 billion, somewhere in that neighborhood. So what did I do? I bought twice the allotment, and it's doing well, okay? It was a gold pick. We went over yesterday how gold is a good one. And it's very simple. My process is super, super simple. So I put it in a post for everybody so we can see it, and I'll pull it up easily next time. But again, that's kind of what I did. Now let's talk about yesterday's stock market. We'll look at a 5-minute chart because yesterday was tough. But what happened? People bought the dip. They bought the dip. You can see this was the pre-market. We were down. They bought the dip on open, and then it couldn't hold. But in the afternoon, we continued up. That's bullish. That's a bullish signal. Now, the 4-hour algorithm, we can run this one on QQQ. It had you out. Did I get out? No. One day is not a trend. But what worked yesterday? And this is what's interesting. Crypto worked yesterday. Okay? IBIT was up like 3%. Okay? It was a good day for IBIT. IBIT doesn't have you in. I will be buying the next time it gets me in. It is up, let's see, 0.3% in pre-market. I will be buying another lot when it gets in. But maybe crypto is now becoming the digital gold because, again, gold was up yesterday. While the markets were down, gold and crypto were up. It was due to the bond market. The 30-year kind of spiked to 5%. It's not the 10-year. We saw the VIX spike. We saw the CNN Fear and Greed Index up there. We're at 17. If you look at yesterday, we came down and then went back up. So today, what is that VIX going to do? It looks like it's fairly level. Doesn't look like it's going crazy. But again, one day does not make a trend. When I look at QQQ and I say, okay, for my long term, the indicators are stretched. They are. But we're still on that upward trend line. So I'm not concerned. Let me give you a few opportunities in the core portfolio. Okay? Robinhood went under 100. Did I buy it? No. Do I think it's going to go up? I think I'm probably going to miss this one again. Last time I regretted it. It went up to 120. It was under 100. Today in pre-market, it's 101. You want that one for long term? I think you're fine. Again, they're having some product announcements in September. I think it's going to pump. NVIDIA back down below 170. 4-hour algorithm got you out quickly. Where do I think this one's going? I think it could go to 160. But long term, these guys, they just reported earnings. And they didn't include any China revenue in the actual earnings or in their guidance. If that opens up, this adds another NVIDIA on top of it. The market cap is $4 trillion. Can it go to $8 trillion? I don't think so. I think it maxes out at $5 trillion. Again, from 4 to 5 is not a huge jump for these stocks right now. You had Palantir hanging out it was back to 150. We've talked about how it's sitting here at this 160. 4-hour algorithm got you in at 157. 4-hour algorithm trades you make over the last 24 months. If I told you that you could trade 22 positions over 24 months, less than once a month, and make 431%, you'd probably be fine with it. But if you buy and hold, you make 923%. Now, the valuation of this one makes no sense. Am I buying it? No. But for those that want it, you can get it. And again, yesterday was a steal. CrowdStrike. I've talked about this one before. CrowdStrike under 400 is a great steal. Yesterday, the low 407. You had your opportunity to get it yesterday. And I put out the September watch list right here. Okay? It was a heavy day. One stock was up 5% in the watch list. One stock was up 3%. One stock was up 2%. There's 7 strong buys in the quant. I built a watch list on Seeking Alpha that is down here. September watch list. The entire portfolio was down less than the Qs, less than anything. Again, if you bought just the entire portfolio, you'd be down. And that's, again, it's an even weight, so it's not logical, blah, blah, blah. But I'm going to track that one. FYI, every stock in the list is up year to date from 11% to 459%. So it's not like I picked losers on the year. And I was sitting on the couch this morning, okay, on my mobile app, Seeking Alpha. And you can get, it looks a little different on the mobile app, but I wanted to find stocks. And you can see up over my head right now, trending AI stocks, okay? I was sitting on the couch. I said, let me look at some of the top stocks. This is in, if you go down to the bottom left, stock screener. And you just look at trending AI stocks. Okay? Let's look at one. The top one, PGY. And this is top trending AI stocks based on the quant rating. The quant rating goes from 0 to 5. This one has a 4.98 rating. And the quant rates it based on 5 factors: valuation, growth, profitability, momentum, and revisions. Okay? The analysis after their last earnings, you can see right here. Strong buy, buy, buy. Seeking Alpha analysts say buy it. Wall Street says strong buy. The quant says strong buy. Do I like this one? You're damn right I like this one. Now, here's the thing. It was down 1.41% yesterday. It's up in pre-market. It's bouncing back. Is this a good one? Ranked in the application software industry, 1 out of 184. Let's look at it. Let's analyze it with AI. Say you know nothing about this stock. Well, analyze it with AI. What space is it in? Well, its competitors, Upstart Lending Club, and SoFi. Are those ones that I like? Yeah, they pop a lot. So I like it. Then you can look at what each Seeking Alpha one. Profitability, I saw C-. I said, that's not great. The only negative is the net income margin, indicating areas for potential improvement. Momentum is great. Revisions are great. And then you look at the positives and negatives, and you can figure that out, okay? Now, do I like this stock? Yeah. So I'm going to put in a note. I'm going to add a custom note in here. I'm going to say today's date is 9/3. Found it on Trending AI Stock Screener. Trading at 36.81. 36.81. I put 26. 36.81. Boom. Done. Save. The note is in there. So now what do? I go over to Trendspider, PGY, and I say, okay, let me look at the 4-hour algorithm. 4-hour algorithm has me in at 34.44. It doesn't trade all that well. Okay, it doesn't win, but you can see this huge win right here from 9% up there. Let's look. You can see the MACD has reset. The RSI at 61. I'm looking for this one. Does it have confirmation? It does. Am I 100% sure in this one? I don't feel like I am. So let me go long term and look. Well, we've got a positive 50-day. We've got a positive 9 and 21. We just have the 200, but that one's negative. That one may provide some resistance. So am I willing to get in at 36, knowing that the resistance, which came here August 4th, right on the 200 day, is at 39 or 40? No. No. That's the thing. The reality of this is it doesn't make sense for me right now, but I have this note in here. So if I check back in within a week and all of a sudden this thing's at 40 and it's sitting above the 200 day, maybe I take the chance. Again, that's the way I look at these things. That's why I tell people, we just went over alpha picks. Seeking alpha premium is an opportunity for you to actually find stocks before they pop. This one may pop. It's not the 4-hour algorithm, but it's an AI stock. I like this one. Again, application software, it's ranked number 1 out of 184. The quant has a way of beating the market. And it's got a 17% short interest. So when they announced earnings and we saw that pop on earnings, boom, it's because they have 17% short interest. By the way, just so happens, there's 10 analysts that cover this on Wall Street. They think it's worth $40. Is it worth me getting in for a 10% gain right now? I think there's better opportunities in the market, so I'm not going to do this one, but it's on my watch list. I've got a note in there. Now, as far as the overall economy, we are heading into holiday spending, and this is concerning. Holiday spending likely to see sharpest decline since pandemic. That would be a bad thing. Okay, we're in a consumer economy. Ask your friends. Go to your mom group after yoga at 1 p.m. and ask the moms, are they spending more on Christmas or less on Christmas this year? It's a good gauge of how strong the economy is. It's a good gauge of how people are feeling. This survey, people are going to spend less. That's not good for the stock market. It's not good for the stock market. Put on top of that the potential of tariffs and supply chain issues, and you've got the potential for a pullback after the holidays. Because if holiday spending isn't going well, you're going to know that after Black Friday, and boom, the market will respond. So understand, that's what's setting up right now. Now, big news for me, okay? In huge legal news, Google not required to sell Chrome, and they can stay in the Apple ecosystem. So Apple basically gets, I think it's about $100 billion, which could rise to $200 billion. For Google pays them. It's a no-brainer. Google pays them to be the default search on iPhone devices at $100 billion. That could rise to $200 billion. Okay, that's why Apple and Google are up in pre-market. Apple is up 3.72, Google is up 6.73. Okay, for Google, it means they don't have to give up their competitive advantage of owning the browser. They own you with all of the data. They look at your email in Gmail. They look at all your search results. They target you with advertising. That's what it is. The valuation for Google, if we just go look at it, it's crazy low. Even though it says it's high at 21, it's not high historically compared to the rest of the Mag 7, which are trading at 30. So that's the bump that you're seeing today. It's just bumping up to get the valuation more in line with the rest of the thing. If the valuation is it, I think this one goes to 240 to 250. Throw in the premium tech valuation because they are leading AI. And I think you get a stock that could go to 260, 270. Now, Wall Street hates this one. They're at 222. In pre-market, you're trading at 226. They will up their price targets. This is one that I like. This is one that I've liked for a little while. I think the weight is just lifted off of it. I think the street is just so focused on a search revenue that they're not looking at this one correctly. But again, for those people who didn't like Google at 145, if we go and look at Google on a chart, if you didn't like Google at 145, you're not going to like it at 222. And you can see here, if we look at a weekly on this one, it's a little extended. So would I be buying here? No. I would be looking for this trend line to maybe pull us back. And my guess is, and it's just a guess because we haven't seen it, But I think 200 is going to be your support. I think it actually moves to 220, yesterday's price. So again, for Google, I think if you didn't like it at 145, you're not going to like it now. Now for Apple, look at Apple, because I have an idea for Apple. Apple is 50% of my portfolio. So I follow this one really, really closely. We've got a iPhone 17 announcement coming out. Okay. This court ruling means 100 to 200 billion of free revenue from Google to remain. Maybe OpenAI. Hold on. My camera. You're gonna miss me for a little while, but I'll be back, I promise. There I am. And AI tracking. Boom. Couldn't have happened at a worse time. I was on a flow. Okay. I hope it stays. So my camera messed up. So there's a little edit in there. But for Apple, $200 billion of free revenue for Google. Maybe OpenAI starts paying them. Maybe Perplexity starts playing them. Maybe they go into some type of partnership with another AI company. Who knows? But again, where does Wall Street think that this one is worth? 235. Where are you trading in pre-market? 237. It's over that. They will start taking this one up a little. But I think with Apple, it's a little different. Okay? Because if we look at the chart of Apple, you'll see there is some resistance at 240. This 237 right there. We can go and look at a weekly chart. 237 has been a resistance level right here. We broke out of it in December. We broke out of it in February before the bottom fell out to 200. So here's an idea for people that have Apple. Okay? Get QQQ. Because if you're looking at Apple and you're saying, oh, okay, let's look at the valuation. It's 31 times forward earnings. Okay? Usually growth takes care of that. But their growth is 5.97% year over year. And it's expected to shrink. We do have an iPhone 17 event. But I think with this thing, I think you could trade Apple at this 240 and pull back. Now for long term, it's a $260 stock. I don't care what you say. It's a $260 stock. But for me, short term, I'm looking at this opportunity to pull out of Apple and get into the Qs. The reason is because you still have major exposure to Apple in the Qs. But you also get Broadcom, you also get Amazon, you also get Microsoft, you also get Nvidia, you also get Meta. It's just a way to pull some money off the table, put it into the Qs. Again, I'm 55 years old. Do I want to take the risk that I was taking at 20? Probably not. So it's just an idea. And again, the thought process is there, using the charts, using everything to make sure that I'm optimizing as much as I can. Am I going to be perfect? No. Am I going to make mistakes? Absolutely. And I brought up yesterday, gold, it's at all-time highs, set fresh records. Fresh records. This article kind of points it out. Highcroft Mining and McEwen closed 20% up to lead dozens of mining stocks to 52-week highs. And you can see all the mining stocks right there. So this particular one, I have my favorites, and I've got enough gold in my portfolio that, yeah, that portion of my portfolio did great yesterday. Now, Zscaler beat earnings. This was incredible because this was up like 10% in pre-market. We can go look at it, but it has pulled back. We're going to, I need to pull this out. Remove, let's just remove all. Yes. But let's look at a 5-minute chart. And you can see it popped up here to 305. We're trading at 276. It popped up to 305 on the announcement of earnings. And then it pulled back. But they did really well. Now, why did it pull back? Well, year to date, this one's up 52%. 52%. Wall Street thinks it's worth $320. Okay? The only problem is the valuation. It is super expensive. But when you look at the 4-hour algorithm, okay, did it have you in? Yeah, 273. You could have gotten out there. Would I have said get out? If this were my stock, I'd be looking at the all-time highs, which is way back here. You just kind of pin it right here. And boy, where's that? 374. That's where you're probably going. Again, stock charts have memories. Are you going there over the next few weeks? Probably not. But the 50-day, you can see how it bounced right off the 200. We're kind of just fluttering around that 278. If the economy continues to go and Zscaler and cybersecurity continues to go, then maybe you get to this Wall Street target of 320 because their revisions are up. So again, I like Zscaler. Do I own it? No. I do own Amazon. Amazon. Remember how Netflix changed the game when they started charging you per household? Amazon's about to do the same thing. Remember what happened to Netflix stock when they did that? When they started cracking down on passwords, and I said, you know, even if they get 20% of people, it's going to be a boom. That was back here in 2024. The stock was trading at $5.59. You've doubled in a year. Simple as that. Now you're leveling off on Netflix because they need to pull those triggers. But Amazon, could Amazon double? Probably not. It's a little different style of a company. But does that push us over the 240 previous highs that were in February? Probably. I like this one. As someone who uses their parents' Prime account, I don't like it because I'm probably going to have to buy my own Prime account. But this is an interesting option for them. I like it. And you just liken that one. You know, Amazon, again, 4-hour algorithm makes you 48% versus 65% buy and hold. This has not been a stock that has been good to buy and hold ever since July 2020. I mean, honest to God, July 2020 was a time to get out and to move on. Now, January 2023, time to buy at 84. It was just, that was common sense. $84 for freaking Amazon? You're kidding me. Now, I did hear yesterday, Adam Parker, which I like, he's on CNBC every now and then. I like him. He brought up Constellation Energy as an example. And he said, you know, hey, what am I looking at in this thing? He said utilities. And this is a utility, Constellation Energy, to a $95 billion market cap. And he said, we are going to need energy. And it's a utility. And it gives off 2.5%. They don't pay back in dividends. He thinks this company goes to $2 trillion. What does that mean for the stock? It means it goes from 300 to 600. He also mentioned that his firm took a look at 10 baggers. Now, 10 baggers are stocks that go up 1,000%. Okay, they give you 10 times over a certain amount of time. He argued that every single one of them had to live with a 50% drawdown. Now, Constellation Energy is not, its price target is not $600. It's $333. But it's an energy stock. And what powers energy or AI? It's energy. You're going to need energy. So he brings it up. Now, another YOLO one that I think, this is Eric Jackson. He's the one that started the open trade, Open Door. Now, Open Door is up big in pre-market. Why? Because he had a meeting yesterday. And I think people are buying into this one. It's up 2.75. It was way up earlier. Look at a 5-minute chart. This one swings. This one swings a lot. Look at this one. You could have gotten at $4.25 yesterday. You're up $1, almost 25%. Let's look. I mean, if you just bought this on the open yesterday, today you're sitting at a 25% gain. I like this one, but this is the account to follow for that one. Open. Okay, I'm going to YOLO into this one. I'm not putting a ton of money into it. But if this one goes to where Eric Jackson thinks it will, it's a big move. This is the guy that called Carvana. I mean, that's what it is. And Carvana was a huge, huge move. Now, another one that I've talked about before, NAV, net asset value. Go and Google it. Go and ask AI about net asset value. BMNR finally trading at a NAV discount. Tom Lee added another 170,000 of ETH. So the NAV, 8.78 billion. The market cap, 7.4. Boom, it's up in pre-market. Let's go and look at it, BMNR. Now, I don't typically look at this stuff, but again, their market cap, 7.37. 7.37 billion. You're trading at a discount. It's up 2.64. This will be highly volatile. It will absolutely be highly volatile. Wall Street, there are one analyst that covers it. He thinks it's a $60 stock. I mean, again, one analyst. Do not hold that one. This will be highly volatile. I've listened to Tom Lee. I like this stock. I'm going to get into it. When? Probably look at the 4-hour algorithm on this one. So let's look. I mean, again, this one has only been open for 89 days. Got you out here with a 45% gain. 45% gain. That's fantastic. If you bought on the open down here, again, when it was 0, you're up 447. That's not realistic. But again, 39 would be a great price. Am I ever going to get that? It's at 43 right now. Maybe. Again, risk, reward. And I loved Shai's take on energy. So the Secretary of Energy, even if we wrapped the entire planet in solar panels, you would only be producing 20% of global energy. And Shai's take, somebody needs to explain to the Secretary of Energy, it's not a supply issue, it's storage, transmission, and deployment. He gives you everything. First Solar builds the panels. Tesla powers the home stack. And EOSE tackles the grid scale storage. If you're interested, go and research those. How do you research them? You use Premium and Alpha Picks, and you use Trendspider. And Trendspider extended their offer again, one more day. Promise you, it is not available again. But it's 50% off. And to get my 4-hour algorithm, you don't need any. You don't need any tier. It's any tier. You don't need to do the advanced. You don't need to do the enhanced. You don't need the premium. You can sign up for the standard at $51. I would tell you get the premium because it's only like $1 more, less than $1 more per month because it's 42% off. The reason I steer people towards this advanced, because if you don't know charting, if you don't know the Trendspider software, it is a big lift. And this gives you 52 training sessions per year, 1 per week. So think about it this way. You want to go learn piano? You're going to pay $70 an hour for somebody to teach you piano. You're also going to have to buy the freaking piano. This gives you a lesson for less than $26 per, okay? Divide 107 by 4 because you get 4 per month because there's 4 weeks per month, 52 training weeks per year. And you get the tool for free. It's like giving you the piano for a year. So again, that's the way you do this. And Shai, again, outlines this. I love this. Now let's take a look at some earnings tonight because we are at the end of the earnings season. At the end of the earnings seasons, we're going to look at this. Okay? Salesforce tonight. I got rid of this one. I bought another one. I'm up 50% on that one, at least, if not 60% on it. But again, Salesforce, expected earnings per share $2.52. It's reduced from what they reported last time. Expected revenue up slightly. Is it an opportunity? Well, Salesforce just announced that they are replacing call center agents with their software. Pretty big freaking deal. Don't count Mark Benioff out. But do I own this stock? No, I got out of it. Why? Because I don't like the way this one's trading. It wasn't a large position. It was in my Roth. I've held it for a few years. I added to it. Never really worked out. There were always better opportunities. But when you look at this weekly, is it just beaten down enough at the 200-day that we could see a nice pop? You could. Again, Salesforce out there touting stuff. One that I think a lot of people have because it's the #1 2025 stock is Credo. This is a semiconductor company. They reported 35 cents per share last time. Expected 32 cents. You can't see this, but it's over here on the right. 170 million in revenue. This time expected 190 million. We know the semiconductor companies have been killing it. We know that SMCI, Hewlett-Packard, and Dell, Hewlett-Packard I think reports later, but Dell, Hewlett-Packard reports tonight, but they've all reported, shit the bed. So, do you like Credo? Well, I got rid of mine, half of mine, at 97. Where's it trading right now? It's trading at 124. It's putting in a nice shelf. 4-hour algorithm got you in here at 115. 4-hour algorithm doesn't beat buy and hold, but it wins 50% of the time. 20 positions over 24 months. So you're trading literally less than once a month. And you've got gains like 127%. We're just going to remove this segment. 127%, 3%. Huge gains. 52% back here on the left in January. And then when it dropped from here, 75, all the way down to 40, it didn't have you in, it had you out. You got out with a nice little loss, and it timed it. This is the 4-hour algorithm. This is why I have the 4-hour algorithm. I use this as a guide for all the trades that I do. Okay, and then you've got Fig with its first earnings. Who knows what the hell's going to happen with this one? This was the IPO that was hugely anticipated, that doubled, and hasn't come back yet. Remember, the IPO was at 40. This is trading at 65. Where are we going? My guess would be 40. That would be my guess. There will be a time to get in here. It's an AI play. Okay? You've got Arista Network. I'm sorry. You've got Palantir, which just got you back in. Palantir. 157. Is this one that you wanted to get into? Because now you've got the opportunity to get in there at 157. So you've got a lot of opportunities. All of these, all the scans are going to be in the 4-hour in the newsletter. I'm sorry, I'm typing while I'm doing this because I'm messing some stuff up. But it's all in the newsletter. If you go to the newsletter and you just go down to the bottom on most posts, you'll see the scans, and those are entries in the 4-hour algorithm. So if you have any questions, you can hit me up. All of the sales, by the way, can be found at Linktree, linktr.ee/daily stock pick. You see it down below. The link is down below. But you get Trendspider, Seeking Alpha, the bundle I suggested. If you don't want the bundle, by the way, and you just want to evaluate your own stocks, you can get a free 7-day trial. Go and get the 2025 top second half and the top stocks because they're still running quite a bit. And if you just want alpha picks, you can get alpha picks. That's all on Linktree. You can get Webull. Join Webull today. You get up to 75 free stocks. By the way, my Webull account. I bought some Ethereum in Webull yesterday, so Ethereum is now in there. It is up 1%. It's now at 13.3. Remember, that was almost at 15,000 a few weeks ago. So I haven't been doing as well, but it's a highly leveraged portfolio. So again, you can get Webull. You can get $2,000 off a Tesla. I don't know what their offer is, but go and do that. You can also follow my trades on Savvy Trader. Savvy Trader is a great one. We can look at the core portfolio here against SPY. Okay. We can look at the max. The core portfolio is up, let's see, 57% during the same time period that the S&P is up 47%. It's a good portfolio. Year to date, the core portfolio is underperforming the S&P 5%. The reason? Because Eli Lilly is a large portion. Remember, this is just 100 shares of every stock of, let's see, it's 33 positions right now. It's just 100 shares. And I buy them at one time. I don't trade them. I don't optimize them. I just buy 100 shares. And it's a $1.12 million portfolio. It's a fake portfolio. But it's there. I do have other portfolios where I provide those to the paid newsletter subscribers. So if you have any questions, again, even my email address is over at Linktree. So I will talk to you tomorrow. See you. Bye. Damianos, I just sold CRM. August 11th, I sold CRM and bought another stock, which, by the way, was the best decision ever because because that other stock is up like 60%. So it was a fantastic move. I just took the warning of software. Software is beaten down. I mean, make no mistake, software is beaten down. And there might be an opportunity for Salesforce tonight with the lowered expectations. That could be a good one. Okay, I'm not going to do that. We're just going to colorize it a little bit, a little dark. There we go. And we'll go to volume, auto, copy, and then paste adjustments. Oh, there we go. And let's edit out the beginning. And I need to link this one in. Maybe OpenAI. So my camera messed up, so there's a little edit in there. But for Apple, 100, 200 billion dollars of free revenue for Google. Maybe OpenAI. I'm gonna take that one out. Maybe OpenAI starts paying. Maybe. There we go. That's gonna be awkward as fuck, but I don't think anybody's gonna notice. It's just a flesh wound, to quote Monty Python. I think that was Monty Python. Let's see. By the way, hit the thumbs up button if you haven't already. It does help the channel. It really does. I know there's I don't look at growing this, and I don't do a very good job of growing it. So I don't do a good job at all. Okay, let's look. Let me look at my Palantir's down. Did the market take a dump? I'm probably way up, by the way. So, I mean, between Apple and Google being top 5 positions, yeah, I gained far more than I lost yesterday. Far more. I mean, I'm up 1.8%. 1.8%. So, and that stock that I bought instead of, I'm up 62% on that buy. Even though I got rid of half of my position, I'm up 62%. Let's see. Yeah, it was a large 5 figures. Damianos. Yeah. Thanks, Josh. Open, I like. If you got play money, Open makes total sense. I mean, Roblox is just putting in that nice platform right there. Good God, but that valuation just scares the hell out of me. So, okay, let's look at, we need to go to Canva. What's the title of this one? Let me see. It is Real Trade Mistakes. Let's put this in here. Real Trade Mistakes. Crypto's Breakout, Gold's Record. Okay, so we're looking for Earn While You Sleep. like that one. Oh, I'm gonna get rid of that one. I have to start moving stuff to trash. They're doing the lawn outside. Let's just do this one. We'll do this one again. Take out that guy and we'll put in the confused Gary. We don't need that. We'll expand this out. Penny. Crypto and gold breakout. I think I want that in bold. Yeah. And boom, boom. There we go. We'll get that. We're gonna put that there and there. Top AI. Ooh, there we go. And we'll bold that. We'll get rid of this. You know what? I want to shrink this down. And we'll put that there. And get this. Type 4 t-shirt. I need to do that. I need to tell my girlfriend we need the t-shirts. Google and Apple, let's see. Uploads, I'm gonna put we've got this one in here. There's no reason not to put this on here. Kohl's, DoorDash, Interactive Brokers, Celestica, Coinbase, United Healthcare, Vistra, D-Wave, Rigetti, Okta. Let's put this in. And we'll shrink this down and put this in over here. Move that. And move, that like that. Uploads. Put it in Salesforce because I talked about this one. Celestica was down yesterday, so yeah, I mean, it's going to be up. Abercrombie, MicroStrategy, Citi, Delta, Carnival, Micron, Broadcom. That's going to be earnings related, so we'll put that one down there. Uploads, CrowdStrike I brought up. Uploads, Oracle. I probably did Oracle. I did Oracle enough to include it. Not in the actual podcast, but in the live. Shopify, AMD, Meta, Amazon. We did Amazon. And uploads. NVIDIA brought up. Uploads. Okay, we're gonna put Google. And uploads. And we'll include Apple. I gotta get a lot of those pictures out of there. I just don't use them. I use like 4 pictures, and I have to take new pictures. My hair grew in a little, so I need to take new pictures. Let's put copy, paste, and we're gonna say huge news. Oh no. On. And we'll put uploads, Trendspider, and Seeking Alpha. There we go. We'll share that. Download. That's it. Okay. Let's see. I have done everything. I've answered everybody's question. Hit that thumbs up if you haven't. I will talk to you guys tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.